Hello investors, welcome to Proximo, the value stock analyzer. Today we're continuing our coverage of Mullen Automotive, and what a week it's been for Mullen Automotive. Quite the news week for Mullen. We're going to cover the current state of Mullen, and then we're going to take a look at some of the news articles that have come out around Mullen, including delivery of vehicles at the end of the month, and some lawsuits and resignations at the company. Please give us a like and subscribe. Your subscriptions really mean a lot to the channel and allow us to continue making this content. Also, please check out Proximo.com so you can see some of the financial analysis for yourself. So first and foremost, Mullen Automotive is trading at 15 cents today. This is a new 52-week low, I think. Actually, so the 52-week low is 13 cents. 15 cents is just above it. This is as low as we've seen it since we started covering Mullen almost 2 months ago. I think this time last week we were closer to 20 cents. Now we're at 15 cents. We do also see the previous year's earnings finally show up on Proximo. We could see total net income minus $739 million. That's a negative growth rate of 1,500%, and still putting up goose eggs for revenue. Mullen has not posted any revenue to date. If we take a quick look at the balance sheet, we've got $68 million in cash and cash equivalents in the coffer. They continue to have cash because they are diluting their stock at a rapid rate, which also accounts for the very low stock price. However, silver lining here, the CEO, David Michery, reported this week through a PR notice that Mullen expects to make its first deliveries of its Class 1 EV at the end of the month. In December of 2022, we talked about this too. Mullen announced a purchase order from Randy Marion Isuzu LLC for 6,000 Class 1 EV cargo vans for approximately $200 million. It's a really, really great transaction, and if Mullen is able to deliver on it, it's a really, really good start for the company. Just a reminder on the capital position, as of February 28th, Mullen has $87 million in cash and cash equivalents, including restricted cash, and Mullen expects to receive an additional $110 million from firm commitments by June 1st, 2023, which could finally put revenue above the $0 mark, which would be very, very good for Mullen. Not so great news for Mullen this week. The chief accounting officer resigned, as well as their auditor also resigned. This may also have had an impact on its stock price. Typically, when you see members of the C-suite resign at a public company, it could, be for unfortunate reasons that are material to the business. This article in Investor Place does point out this begs the question, what is going on with Mullen's accounting department? For starters, it's apparent that losses are rampant. The Brea, California-based company reported a net loss before accrued preferred dividends and non-controlling interest of $378.46 million for 3 months ending on December 31st. On top of that, Investor Place's Tom Young noted possible accounting errors concerning the majority acquisition of Bollinger Motors. We've noted that as well, and Investors Place has noted that the way that Mullen does their balance sheet is peculiar, to say the least. This might be a correction, which could be viewed as a positive that Mullen is getting its accounting in order. Finally, another piece of news that came out, lawyers want $3 million for failed Mullen stock lawsuit. Lawyers in a failed class action against Mullen Automotive are now seeking $3 million in fee awards. They allege that their actions ultimately resulted in a more efficient company. Mullen stock is down 50% year to year. Basically, there was a class action lawsuit filed against Mullen Automotive. You can see here, stockholders filed a putative class action complaint against the company. The shareholders claim that Mullen's proposal to change its state of incorporation to Maryland from Delaware created to escape litigation for its board of directors. They also claim that a majority of common stock votes, when considered separately as a class, did not vote in favor of an increase in authorized shares at the 2022 annual meeting. Basically, there was a class action lawsuit. It failed, but as a result of the lawsuit, Mullen became more efficient, and now these same lawyers are suing to get, I guess, like a fee for helping Mullen become more efficient. This seems kind of, I'm not a lawyer, this seems kind of crazy to me, but the bigger you get, the more popular you get, the more people that are going to come after you and attack you for something, and that's what this feels like. But I'd be curious to know what you think in the comments below. Please leave a comment below and let us know what you think. That is it for today. Please give us a like and subscribe, and please check out prosimo.com. If you'd like to see us cover more of Mullen or any other stock, please also let us know. Go find some value.